So we are going to be looking at opportunities in emerging sectors across Africa. I want to be able to also see it across Africa. And the first thing I want us to look at is why exactly are we looking at Africa beyond the fact that we're Africans, right? I want to assume that maybe there might be someone maybe online that is not an African, right? That is joining and is wondering why should I care about Africa? What's my business with Africa? Because it might look as if the only reason we have this conversation is because we want to build, Aluta. We want to build the Africa of our dreams. I don't really believe in that. If something is economically viable, how many of us, how many people that invest in the UAE invest in it because they want to be an Emirati or because they really don't like their culture of being a fan. The fact that, for example, it might just be the tax incentive and many other reasons that is what makes it economically feasible for them to say they want to put their money there. So this idea of trying to sell Africa emotionally, I personally don't believe in it. Let's sell it economically as being economically viable, and we'll welcome people that want to profit from it. Everybody's looking for profit. All this emotional blackmail about Africa, I don't buy the idea. Right? I don't buy the idea. We have talent in Africa. We have ideas. If we truly do, let's put it on the table. Let us put it on the table. The likes of Money Points have raised, I think, Series C now, over billions of dollars. Right? That means they've proven that, okay, so this thing works. Right? They've been able to penetrate the informal market. Now, if you have more and more of such, we're going to do something. People are going to put their money there, not because they are trying to build any Africa, but because it makes business sense. If you're my siblings, I'm not just going to give money to you because, I can give you money because you're my siblings, but it won't be something tangible. I'm not going to give you ₦1 billion because you're my sibling. Even people that have trust, the trust have conditions. It's not just because once you are 18 you can access the trust. Maybe some do, but some, when you are 18 and you want to access the trust, you would have to present a business plan to the people in charge of the trust. There's a board. So it's not even free money. So how come, if family can be free money, why are we expecting, sensational Africa building? It's not done anywhere. Right? So let's look at why exactly are we talking about Africa beyond the whole sensation and all those things. First thing first, Africa has an above average GDP growth. There's also the population angle, but let's even look at the GDP growth. It might be, someone can argue that it might be a buzz, because there's many startups in Africa now. People are financing. Someone said, give an example. I said Africa is the new Silicon Valley, right? Because every day there's someone building something new, someone trying to innovate something, and all those things. But real GDP growth has been about 4%, 4.3%, which is above, a bit above global average, right? That might be a sign that, okay, there's a potential here, right? There might be certain economies, certain countries that are actually getting it right, that, might be worthy of attention. I think a country like Rwanda right now is when it comes to innovation hub right now, Rwanda is more like at the forefront in Africa, right? Nigeria also when it comes to certain some startups, but I think Rwanda is more pronounced when it comes to incubations and innovation and things like that, right? Now, that's one. Another thing is that there's a whole lot of young population. I think the median age in Africa right now is 19 years. So it means that Africa is the future of workforce, right? It's not just grammar, this is data. So for example, we might not have the manufacturing strength like China, but when we look at a country like Singapore, that was able to actually leverage both the manufacturing sector and the service sector. So Africa might be able to actually leverage the service sector with the workforce that we have. Now, there might be need for training and development. There might be need for capacity development, and that's not negotiable. But we can't doubt that the talent is there. So I'm giving this rationale for why exactly are we even considering, why are we not talking about the UAE? I have someone that, she's an African, but she's crazy about the UAE. That's what she talks about, investing in the UAE and things like that. So if I'm also going to be talking about that, so now let's put that side by side. If someone is putting investing in the UAE on the table, and someone is putting investing in Africa on the table, why should I consider Africa? First thing first, one of the things that will slap you in the face is corrupt government. or let's say corruption at the large scale. So I mean, but then you share the UAE, and there's a lot of things that you would say is working right, or structures that would not give room for corruption, right? I was watching a video online some time ago, and a lady was trying to cross the road, and she was walking, but she was not crossing on the zebra crossing, and immediately she got a message and saw the fine she has to pay. So there's nobody need to come and arrest you, nobody needs to come and accost you. But when you get there, you would see the fine that you need to pay, right? But beyond these structures, are there also pros or advantages or strength that we can look at in Africa to say, okay, these are some of the reasons why we can also consider Africa as a potential investment frontier, right? Now, also we have the mobile. There's a whole lot of mobile adoption in Africa. So you would see the likes of, there's a question I used to ask, that why do you think social media pay creators? Is it because they like them, or because they keep people on their platform? So it means that as much as Africa has the young population, it can work for us or work against us. It can work, maybe not work against us, it can work to favor us or work to favor other people. So it could either favor us as the young population being productive, or favor other creators as being consumers of what other people are creating. Right? So the likes of Facebook will look at Africa and they're not seeing a productive workforce. They are seeing consumers, they are seeing target markets. Right? The likes of YouTube is seeing target markets. And they want to get there. They want to just come in and just get a share of our attention and just give us peanuts and move. I mean, there are a lot of conversation around entertainment space that in the US, a 1 million stream is about maybe $3,000, $5,000. In Nigeria, it's about $300. Right? Yeah. The same million streams. Now, but their argument is that in the US, what they are paying for monthly subscription is about times 5 what we are paying for monthly subscription here. Because, I mean, how many of us are using Netflix that we pay for, or the family plan? I mean, you just ask for Netflix password. You have siblings that sometimes there's times I want to watch Netflix and I'm like, there are already enough devices on it. I'm like, I'm the one paying for this now. What's happening here? Right? So these are the realities that we have on ground. But it also means that there is a technology adoption, right? So people are tech savvy, right? There's this from the we are thankful for the likes of Andela that really championed this wave of tech skills that people, an average Nigerian, an average youth now at least would know graphics design, even if it's Canva, but the person would have a digital skill. And if that is harnessed, that can be an opportunity, that could be a potential thing to look into, right? And then there's a rising foreign direct investment. Now, why is there a sign? Why is that a sign, or why is that an indicator? Right? Like I said, investors are not charity. If a group of people could invest $20 billion in the economy, in Nigeria, so to say, it means they are seeing something that maybe even the local individuals might not be seeing. Right? That if we can just pay attention to it more closely, there might be something we are overlooking. Right. I was having a session yesterday, and someone asked me that based on the economic environment, many people can prefer to go and build in countries like UK, or think there's opportunity in other countries than Nigeria. And I said the truth is that if you live in Nigeria and you've not been seeing opportunities, you might not be confident in the government to harness it. But if you've not been seeing it at all, you've not seen any opportunity at all, if you get to the UK also, you won't see. I'm not saying that you did not see at all. If let them take you to the best economy on earth, you still will not see an opportunity. But you can see, and because of certain structures, certain policies, it might not be encouraging for you to want to commit your capital. But that you won't see, that won't be true. Right? There's been influx of, I think Nigeria is currently top 3 when it comes to startup financing now in Africa. If not, I think number 1 or number 2 actually. Right? We see the likes of MoneyPoint, the likes of Move, the likes of many of them that has been, I think there's this one in Kenya also, this payments app, I've forgotten the name now. M-Pesa. So these are, and one of the things that you would see, it's not just about payment, so to say. It's digital infrastructure. And that's one of the direction I would actually want us to think. I want us to think in terms of infrastructure. That is one, like a connecting link between several touch points. Not just that I'm investing in fashion, but how can fashion be a connecting dot between entertainment, fashion, what's it called? Sustainable environment. So if you can build that infrastructure, that's really where the gold mine is. For example, you think of Dangote's refinery in terms of oil, but there's petrochemicals. There is a whole lot in the value chain, right? But that's because it's in media language, they'll call it a 360 house or a full house service. We need to start thinking of that also, or thinking in that direction also, even in other sectors also, where it's not just about, oh, I'm investing in fashion, but is there a fashion infrastructure that can cut across several other touch points? I think one of the sectors that are able to do that is banking. You see Access Bank have Accelerate TV. You see Facebook, so that's an entertainment angle, right? You see this 30 December, there was a lot of banking initiatives with using your card to access several, maybe rent a space, do all that thing. That's them staying on the infrastructure angle. And that's most times what we do not see. If, as a security analyst, for example, if I'm going through certain balance sheets, I want to see, if I'm looking at maybe the full guys now, First Bank and GT and Co, the top tier banks, it's not just about, okay, I'm checking their asset strength, their dividend ratio. I want to see what infrastructure do they have that gives them a higher leverage than the other ones. That maybe it might not even be the most pronounced now, but it is a potential powerhouse for them. For example, none of us would disagree that the 737 campaign of GT Bank really made GT Bank top of mind. Right? So that might not look like customer service or something that makes is not directly connected to their service. But that's a sign that media, in fact, why are people paying influencers if your media influence do not count? Right? So when we start, I can invest in a company just because they understand how to use media. Because that can be their leverage above other competitors or the other peers, right? So we need to, when we're talking about FDI rising in Africa, it means that there's something these guys are saying that we might also need to take a look at. There's an opportunity they are seeing on the table that we might also need to consider. It's not just about, so let me quickly break something down. Because for the longest period of time, when people think of FDI, we think it's just institutions. It is not just institutions. Yes, there are institutions, but there are individual powerhouses. There are individual powerhouses that invest in Africa. There are families that are finance powerhouses that invest in Africa. Or yes, they will go through organizations to now invest, but then we need to start thinking that individuals also, for example, pension fund is literally individual funds pulled together. There are trusts that invest in Africa. There are so many initiatives, so many clustered financing, and these are the things that we are still quite laid back with in this part of the world. Right? That's what the likes of, for example, the average finance person or banking person now, if the person hears Switzerland, they are not really hearing a country. What they are hearing is a financial abode. That's what they are hearing. Right? And many other countries like that, where you know that, for example, shell companies are more pronounced and things like that. But these are examples of structured or clustered financing that they've been able to engineer to be able to do tangible financing. So instead of us just thinking about it that, oh, we need some institutions to come and finance, for example, how many of us saw our recent deal with the UK government? Right, was it 749 million pounds? Is it million pounds? Yeah, that we did with the UK. And it's the reason why I might be, for some of us who might disagree, I might be pro-tax, right, in Nigeria. Because I think taxation is one of the things that gives power to the people to hold their government accountable. As long as the government are finding other ways to finance themselves, we can't really fight corruption. But when you know it is your money, you know you are paying it. No, protest, you won't need to cajole people to protest. Just my opinion. Because now you know how much you paid last year. And you are saying that you are using my money to buy cars. But you know that the money they are using to buy cars is loan, is World Bank's debt. It might not really touch you like that. So I just believe that taxation might be a way to really put us under pressure to hold the government accountable. Right? Of course, it's not about being highly taxed. It's about being efficiently taxed. Right? So it's not about you just paying an outrageous amount of money. Right? But these are things we just need to. And one of the things I believe that everybody here should be pro to is I don't believe anybody here joins the bandwagon or just run with social media opinion, right? Because there's a lot of opinion around this, but we can do independent observation of this concept and see what are the pros, what are the cons, what are the things I have to throw away, what are the things I have to question, what are the things I have to query, right? And in fact, it might be that one of the things that would encourage more foreign direct investment might be an efficiently taxed system. Because now they know that, okay, the government will now be more responsible. Hopefully, this is Africa. So hopefully. Now, so next thing, so why are we looking into Africa? Why is it a subject of consideration? I want us also to look at the investment principles that has to guide our approach to Africa. Like I said, this is not a sensational cause for, an aluta way to build Africa. We are all business people here. And you are not going to invest in my company because you like my face. Maybe some people do, but you won't commit tangible capital to that. Right? But so there has to be some investment principles that should guide your decision making. You are not just trying to make Africa rich or make Africa wealthy. Right? Even the so-called people, I have an opinion that anytime I hear something like we are democratizing wealth, I get on the edge of the seat. Because I don't believe anybody is trying to make anybody rich. You are looking after me because there's something I have that you need. Unless the name of your company is so and so foundation. In as much as it's LTD or PLC, no. You don't like me that much. That's just the truth. There could be a win-win situation, but you putting it to the front as if it's charity, I won't believe that. So we have to, that's why I want us to check the investment principles that should guide our approach to investing in Africa. Right? And the first thing is, look at cash flow, not stories. A lot of us we are too obsessed with growth stories. Have you seen, for example, news of this startup raised this amount of money this year, they expanded into this country this year, and then the following year, they shut down? The honest truth is the reason why one of the philosophies I so much adore is Graham's philosophy. And one of the things that do not make most people believe in Graham's philosophy is the fact that he believes in investing in monopolies, duopolies, or oligopolies. Because he believes that if you've been able to be in a monopoly or a duopoly, it means you are mature. You've held enough economic strength. So I can go and sleep. You might not give me 500% in 2 years, but I would know that I can compound the 30% every year for the next 20 years. But in Africa, even for so-called investors, we are still quite looking for get-rich-quick scheme. The disguise that's looking for investment opportunities. And that's the truth. So we are so obsessed with growth stories. We are looking for the next 1,000%. And I'm not saying there won't be. For example, Money Point is a clear example. Flutterwave is a clear example, and they still exist. Right? But we've also had the likes of Jumia. 14 years and no profit. So it means that it's a full basket. And the more you are chasing growth stories, the more you are likely to buy fancy, empty promises. And now, I was in a tech event, and I listened to one of the speakers, and I was laughing. Because the way building a product was sold in that presentation, it was sold as it was sold as a poverty alleviation scheme. And I'm like, when did we start building products to, and I don't blame them. That we have more VCs in the continent is not entirely good news. That's the truth. It's not entirely good news. Private equity sees businesses as just buy and flip. Right? Even when they buy so-called solid businesses, because they are for profit. They are for, so there are certain ones that truly have good ideologies and good philosophies that really want to see business grow. And you can't blame them. They want to maximize the potential of the business, to maximize their profit, because don't forget that they are managing people's money. But now, it has now sent a wrong message to an average entrepreneur. Or, I don't want to, okay, let me streamline it. So, an average entrepreneur, that the average entrepreneur right now is looking at, let me just build something, raise money, whatever happens, happens. Let me just build something, exit, whatever happens, happens. And what that does is that we will raise the money, but would betray investors' confidence. And very soon, we would now have scarcity of that capital. That's the truth. How do you raise $500,000, $1 million, then even you raise hundreds of millions of dollars, and then the next thing, your first expansion plan or your first business strategy is having staff retreat in Cape Town. We live in a world of so much branded, I don't want to use the word bullshit, but I guess I've used it. Entrepreneurship used to be work. And so when people are financing entrepreneurs, they have this confidence that if this thing dies, the entrepreneur must have done everything possible to keep this thing afloat. And that's the confidence they are coming with. And if we say we have young people like we claim to have, we should have people with resilience. Not just people that chicken out at the slightest inconvenience, because we had the founder in this country that raised money and was paying himself $30,000 every month. It was a news. It was not hidden. He was paying himself. So, and that's why I say don't chase growth stories. Because these people are the best storytellers. They have the best pitch decks. And that's why it looks as if you would see the likes of Buffett sitting down on $350 billion in cash. And with the old tech wave, AI wave, he's not impressed. He's not chasing any, he's not holding any AI stocks. He's not scared, he's not afraid of missing out. Fear of missing out has nothing on him. He didn't even Apple that he owned, he didn't own it on time, and now he has even offloaded bulk of his Apple holdings. Right? I see some I see so many financial advices online, and I just laugh. Because how many of us heard of the likes of Presco 2 years ago? Is there anybody? You knew Presco 2 years ago. You knew Okomu Oil 2 years ago. You knew, which one is it? Seplat 3 years ago. We didn't. But immediately we saw that they were doing, then everybody became advocate of Seplat. Stock recommendation, Presco. Stock recommendation, this. Am I saying that you could see no profit from entering at that point? Yes. But what you are doing now is gambling. What you are doing now is gambling. Because now, it is now, for lack of a better word, over 2.5. For those of us who understand what that means. Right. But really, the real investors, for example, before 2020, that's COVID, and 2020, Zoom, the Zoom app, grew by over 2,000%. From COVID, this is 6 years after. It has not done that again. So it means that if you entered in 2020, you were liquidity for people who has entered before 2020. And you would only enter in 2020 because you now saw the headline. Zoom appreciated by this amount. So you're like, oh, maybe to still do 5,000%. Now that's what we call sporty. Right, so beware of growth stories and ask the good old question: does this business make money? Does this business make money? I used to say something, I say something often that after you've checked the balance sheet, you've checked the income statement, checked everything, check real life too. Are people buying these products? Are people using this service? Real life people. Now check it. No, you might not even be using it because it might be in an industry where for example, as a man, you might not be using pad. So it might be something you are not using. But are real people using it? And if they're selling volume, if their price, for example, if it's water, are people buying it in volume? Number two, do they really have what's called competitive advantage or moat? That, for example, toothpaste, there's so many varieties, right? But if we ask everybody now to take a consensus, 3 names would be prevalent. 3 names will be prevalent, and that simply means that I've seen you use it. I've seen someone. I've gone to maybe a family friend's house. I've seen they use it. Oh, but imagine you hear of it, maybe a brand that, and you can't remember the last time you saw it in anybody's hand or in anybody's house. Even though they might have something, but it's looking like nobody's using this product. So the question is, are they really making money? Are they really making money? There was a company that listed recently, and when I went through their statement, I'm like, they didn't make revenue in like 3 years, but salaries was in, but I'm like, how are you financing this thing? Now, I'm not arguing that they might have financiers or investors, but I'm saying, to me, it doesn't make sense yet because I can't see the cash flow. What's the guarantee that even this your capital expenditure is going to later yield good cash flow? Right? And, when people are so obsessed with we now live in a world where companies now pay influencers to influence their IPOs. And they will now sprinkle not a financial advice in it. I'm not even saying that using an influencer is bad because you could use it to just do awareness, but make them do it as an announcement. Once an influencer is saying something and they said, I also bought, no, that's a recommendation. Even if you say this is not a recommendation, the fact that you said you bought it is a recommendation. But I mean, we live in a free world. This is Nigeria. Anything goes, right? So we are not here to discuss growth stories or investing profitably is not really an exciting journey. It is quite boring. It is quite boring. If you really want to do the real work, it is quite boring. For example, how many of us can sit down with 10 years annual report for example, you want to invest in, let's say, cement industry, that's materials, and you can pick BUA, Dangote, Lafarge, maybe one other or 2 others, and take 10 years each of their financial statements and go through everything. That's 50 years account statement. How many of us can actually do that? I mean, there are people like me, and I know someone who is even crazier than I am, who can read a 300-page document and would not flinch. Right? And that's why it looks as if someone said, ideas don't excite me. And it's the truth. Because everybody has beautiful ideas. If all of us here put our ideas on the table, everybody here will be financed. Because of how beautiful the idea is. Everybody has beautiful ideas. But are you able to turn it into a cash-flowing business? A cash-flowing business. So we are looking at cash flow here, not just growth stories. Right? So it's not an emotional thing, it's not an emotional approach. Are you making money? And cash flow, there's also now something called cash flow positive and cash flow negative. You can be making money, but at the end of the day, you are not really making money. In fact, there's something called free cash flow. Do you really have cash? So these are things that we actually need to check. So that's why one of the hardest things for me to do is to invest in startups. I'm not saying they are bad, but I'm saying with the kind of what I manage, it is not a risk. There are VCs that have money to throw away. They are able to do the 80-20 rule. I don't want to do 80-20 rule. It is not my philosophy. Right? I want to be able to know that if I'm doing 20, it's 20. I want to do 100. Right? But there are VCs, the angel investors that They know that they just put like 100 and maybe 1 million in like 10 places and hope that one is going to do 500, even if 9 of them lose. And most times you see VCs, for example, I was one of the investors in Moneypoint, right? In over 15 years, Moneypoint was their only win. Maybe in 15 years, I would have gone bankrupt. Right? But some people have money to do like that. Right? For example, you can't be managing a pension funds account and do that. Right? You can't be managing some institutional accounts and you are saying you are investing in one high risk, high growth startup that can, dwindle their portfolio. They are not going to listen to that, right? So there's need to that's where managing risk classes comes in. But the summary of what I'm trying to say is that investing in Africa is not about the interesting stories. It's about the business making real money. And that means the business that is actually solving real problems. They may look boring. Why do you think till date oil business is still lucrative in Nigeria? Because we are still very much dependent on oil. We are still very much dependent on it. Your car, what's the percentage of fuel car and EVs in Nigeria? How many of us have solar but still have generator? We have trust issues. We have plan B to plan C to, and so we are still very much dependent on it. And that's why it is still making real money. I would rather invest in a filling station than some startups, even though the margin of filling station is quite small. But you get what I'm trying to say? Because it makes money. All right. Now, second thing is that, there's something called margin of safety. And that's the gap between what you are paying and what the business has the capacity to grow into. So, for example, if I'm buying a business for one of the metric I love so much when it comes to analysis is what is called owner earnings. I love it so much because it gives you a perspective that you are not just buying 2 shares of this business. It makes you think as if you are buying the entire business. So it means that I look at this business as a whole. If I buy it for 50 billion naira, right? If I value the assets, the entire book value, if I value their future earnings, right? And it is worth, let's say 60 billion. Now, that 10 billion there is my margin of safety. That even if there's no room for growth, even if there's no further room for any expansion, at least with what is on ground, I will be still positive. Now, there are other, I don't want to bore you with certain analysis, but that's basically what it means. And that is why you can't just buy ideas at a level or dependent on the percentage of your portfolio allocation. So you might have, let's say, for example, we operate a 80-20 attribution asset. That means 80% public equities, 20% to what we call, we don't even call it private companies, we call it control situations. We want to be able to ensure that this 20%, if we are giving you this part of this 20%, it gives us a level of influence to really check what you are doing. Right? But that's based on our own ideology, our own philosophy. But I'm saying this because when you say you want to invest in a company, right, leave optimism. In fact, I believe that a good investor, you should have a good level of pessimism. I strongly believe that. That even though the entire books look good, the historical revenue looks good, and everything, you should still have a level of, what if it doesn't work? What if a policy comes out tomorrow? What if there's another COVID? What happens to the business? What happens to my investment? So it means that if I invest in the business today, and this is the downside we are looking at, this is the margin of safety we are looking at. If I say I put 20 billion naira in a business and COVID hits tomorrow, and the business needs to be liquidated or the business needs to go out of business, will what the business have at least cover my capital base? So that whatever profit or expansion in angle, that now becomes extra. But my margin of safety is that I'm not going to lose money. Buffett would say that there are 2 rules to investing. Number 1 rule, never lose money. Number 2 rule, who can guess? Never forget rule number 1. Like I said, it's not charity. Right? So you're able to also put to pen and paper what the downside is and ascertain what your margin of safety is. That you are not overpaying for this business. You are not paying out of vibes and inshallah. You are paying what the business is worth, right? Or you are even paying, you are what's it called now? You are paying less than what is actually worth. So that's what they call undervalued businesses and things like that, right? Then the last one is concentrate your conviction. Instead of doing some random sampling here and there, right? If you find a few solid businesses that makes real money, that has a level of a good margin of safety, then it's not really in the quantity of your portfolio, really. It's not really. So I'm saying all this I'm saying is still in our approach to investing in Africa. That it's not in saying, we have 20 companies that have invested in Africa. Nobody really cares. We don't really want to know how many. We want to see what's your turnover, what's your interest, what's it yielding, what's it returning. What's it returning? I hope I'm not boring us. No. Right. So when we say concentrate conviction, we mean, in fact, if we truly have conversation as we ought to, and we truly have the right metrics as we ought to, we will have very few businesses make sense to us as investors. One of my favorite features when it comes to analysis is something called screeners. Screeners is a portal where you input your metrics. So, for example, I can input operating country, I need it to be Nigeria. So, for example, out of the 5 millions of businesses in the world, it reduces to just the 139 businesses that is on the Nigerian Stock Exchange. Then I put the industry I want. Maybe I put industrials. Then all of a sudden, 139 companies is reduced to, let's say, 15 companies. Then I put something like market cap should be more than 500 billion naira. Then all of a sudden, I only have 5 businesses. Then I want to check, okay, let me check there's something called price PE ratio. That's how much you are paying compared to what it is making. So let's say if my 1 naira in this company is making maybe 0.5 kobo, right? That's your price to earn. I want to check, okay, what is how high is the PE to earn? So I can set it there that I don't want any PE ratio that is more than maybe 50%. All of a sudden, maybe I have just 2 businesses. Just because I have what is called screeners. The question is, what screener do we have when we say we are investing in Africa? And this is just like a bullet point of what the screeners is. For example, there are screeners to check, is the business making cash flow? There's something called FCF, free cash flow. To really check. And one of the reasons why startups are risky is because these data are not available. One of the reasons why people don't believe in business plan is because you are making forecasts with no historical records. You are going to grow by 5%, and you've never even grown by 1% before. And that's why many people don't believe in business plans. Not a business plan. So, for example, if there's going to be a merger between 2 companies, there's going to be a proper business plan, proper forecast, because there's a 10 years historical records of what this business is doing. And then based on this merger, they now have what is called drivers. Oh, you have better goodwill. Oh, you have more asset class. Oh, you have better infrastructure. If we bring those drivers, add it to our historical performance, these drivers should be able to at least give us 10% potential increase. Now, that is a proper business plan. Not just the industry is worth this and we are going to grow by this. No, that's vibe investing. Right? So, there's need for these screeners to check. Are they making money? Am I buying it at fair value? And lastly, what's the quality of this business? Quality can be just can be from the management. One of the most interesting part of a financial report I like to read is what is the chairman's report. Because I want to know although I know that it might not be written by the chairman, but at least let me see what they are looking at. Let me see what they are saying. Right. One of the things I don't like about Nigeria, about some of our companies is how many of us have ever attended annual shareholders meeting of any Nigerian companies? Anybody here? Okay, nobody. Oh, you've attended. How is it? I wish I can give you mic. I really want to. To be honest, it's quite. I watch other investors shareholders meeting, and they are quite interesting. I've literally watched annual shareholders meeting that they were snatching mic from someone that's asking question. That, sit down, sit down. I'm telling you, it's and it's not that they are the company is a bad company. It's because the person is using like 10 minutes to thank the CEO of the company. Facts. I'm telling you, I wish I can play the video. We want to thank you, sir, for all you do for us. In fact, I've seen another shareholders meeting of a company, but for example, let's say this is a group of companies. So maybe we are here for Adesina brewery, but Adesina also has Adesina coffee. And then someone is asking me at Adesina brewery shareholders meeting that can you make coffee cheaper? And the person has to just look at, please, we'll take that. But you know, they are your investors. They also don't want to hurt their feelings. So the person has to perambulate. The investor shareholders meeting you watch, that about 2 hours is dedicated to question and answers. You hardly find 30 full minutes question and answer in Nigerian shareholders meeting. Because the questions are not really questioning. Just so to put that. And that means that the real investors are not in that room. That's what it means. They may not, okay, let me say may not, pardon me. Or bulk of the real investors might not be in that room. Or maybe bulk of the real investors are the ones upstage. For example, I mean, how many percent of Dangote Cement belongs to Dangote himself? I think the most funny one is BUA. BUA literally, what everybody owns. For example, I think Seplat, was it Seplat? About 90 point something percent, maybe even 99 point something percent of Seplat is owned by just 7 people, or maybe 7 companies. But I think, yeah. So the remaining everybody on social media that you are following their advice, they own 0.0000. So the real investors actually, they are hardly seen, so to say, but they are the ones who really understand what they are buying in this thing. And that's why one of my philosophies is that anybody who is selling lifestyle is hardly selling real investment. Because people that are actually making money, I mean, if you ask, we have a finance person in the house now, how they are making money now? You'd ask to book a private meeting or something. But online, they will just encourage. What do you hear Tony talk about? You know, discipline is how you build. You know, you have to be resilient. Was that how you raised? How much did you use to acquire stake in Seplat? Well, I mean, but yeah, I said all those things so that we can actually understand that we need to have tangible screeners. That there's potential doesn't mean everything. I said it's a full basket. And in real time, there might be more trash than treasure. Right. So let's look at sectors that I believe are the next frontiers. Right. So first will be digital economy. This is not just about mobile applications. In fact, I believe we are having more mobile apps for things that people don't need mobile apps for. For example, there's this app called Linktree. Now, you don't need it again because on Instagram, you can literally add multiple links. So why do I need Linktree? So there are many apps that it's the real companies will still later build them. Right? But we are looking at, now, if you check everything here, you will see that what is written underneath it are the infrastructure backing the sector. Not just the exciting layer on top. So for digital economy, you are looking at payment rails. You are looking at the B2B infrastructure. Right? One of the good examples I like to give when it comes to this was when the Access Bank said they were closing, they won, what's it called? They were trying to pitch MTN as their clients, right? When they were at the early stage. And he said that Access Bank actually maybe even sold more airtime. So they were able to embed, they knew what, they were able to recognize where the real money is. Where the real money is. For example, most businesses actually, what you might think is making money on the surface might not be what is really making money for the company when you check it deeply. There are companies that you think, oh, they sell to the public, but they might have just a couple solid, contracts that they service. For example, if you've read Making It Big, you would see that Julius Berger was really the backbone of Zenko Oil of Fort Oil then. Right? So the remaining diesel probably make up of a tiny fraction. So the ability to actually find where exactly is the money in this thing is the main thing. It will shock you that beyond the transaction fees on the likes of Money Points, right? If you check their balance sheets or their income statements, it might actually be more from interest income. The loans they actually give to these businesses. But you might think it's the charges they charge on transactions. That might not be where the money is. At least I know for banking. Right? So we need to, the fact that, digital economy is booming doesn't mean that that's really the popular part of the sector. Doesn't necessarily mean that's where the money is. That's what I'm going to. What's popular might not be what's making money. So we are looking at, for example, data centers. You would bear with, for those, if anybody understands the crypto world here, one of the key infrastructure are the mining centers. They're the mining centers. And these are the ones that you even hardly hear people talk about. You hardly hear people talk about. Then before you now talk about the utilities of the currencies itself. Right? So digital economy, we're looking at the payment rails. Like I said, that most fintech app, for example, have you tried to make payment to certain app and you are seeing Wema Bank? It means that they are still built on the Wema Bank infrastructure. So that means the real money making is that back end. I think even in fintech, in one of the unspoken powerhouse is what is called API. But you hardly see, API is actually popular. Many people might not even know what API is. But that's really what this thing runs on. That's what it runs on. Right? So when it comes to digital economy, it's not really about the fancy part or the beautiful part of it. It's the infrastructure that it lies on. We're looking at energy and power also. When we talk about embedded generation, we are looking at how do we blend both the grid and off-grid to embed them together. Yeah, we're looking at mini grids. For example, how do we really... I've seen several innovations on, what's it called? All these, for example, there are now all these solar one that can power your laptops and just your phone and things like that. But the truth, like I said at the beginning, how many people can actually afford to buy that compared to the volume of people who actually need alternative source of energy? But if you could have mini grids per community that everybody can now pay a token to collectively make, that could be more viable than than productizing it in itself. That's thinking in terms of the infrastructure. In terms of the infrastructure, for example, there are now parking spaces that the roofs is solar. That could be an example of mini grids. Right? Because that might now, depending on putting facts to figures, that might now be where you now check whether is it really profitable, right, or not. When we look at agriculture and food, it's not just about buying farmlands. That's the least of the value chain. You go to Oshodi every morning, there is heaps of food wasting. So looking at the infrastructure is looking at the storage, looking at the processing. Right? You see people that maybe make, I know a woman who makes fufu, right? But it's without, she extracts the smell from it and all those things. Right? She buys the cassava. If you check the profit margin between the person selling the cassava and the person selling the fufu, the margin will be higher. That's the processing infrastructure. But much more than that will now be even that, can we have processing plants for several cassava farmers? I'm not saying that's an idea that should be. It's a rhetorical question. So, but looking at the infrastructure underneath it is how to really decode where exactly is the gold mine in this sector. Everybody is saying agriculture is the new, agriculture is the new. Everybody just don't invest out going to plant tomato. Ask questions. And one of the things I've noticed in, maybe not all over Africa, but in Nigeria, is that we don't really rate consultants. Not the general business consultants everywhere, though. But I mean, For example, you would hear, what's it called? Otedola said that when he wanted to buy Geregu, he didn't know whether to buy the Genko or the Disco. It was consultant that he went to meet that later did and later told him to buy the Genko rather instead of the Disco. But many of us, we just see an idea, and it's just excitement. But one of the ways to actually mitigate that risk is when you are investing as a cluster, because now your weakness, so to say, is now being tabled to a collective scrutiny or a more informed scrutiny to now check that, okay, even though this sector looks interesting, and you might, for example, you might even say maybe you are joining additional partnership because you hear that they invest in infrastructure, and you might just be excited that, oh, energy, yes, power is interesting. But what you don't know is that the investment might not even be in the power as you know it to be, but it's still in the energy space, right? We're talking about logistics. So that's another part, logistics. Warehousing, inland networks, trade corridors. For example, I've not seen much of warehousing. Now, it could be that, now, so many of these things might not be feasible yet. Remember what I said at the beginning when I was talking about banking, that there are some sectors that the foundational structure have been built already. It is easy to build another layer on it. There are some that, honestly speaking, the real investment right now is to build that foundational structure. And so if you are looking to invest right now and you are looking to just put money somewhere and just get some money back and just do some, gig on, garbage in, garbage out, you might not really be well positioned for the real milk in the African economy. To put it as simple as ABC, the people who would make the highest return on Africa are people with patient capital. Not people with reckless capital. I'm not saying just put money. No, not reckless capital. Patient capital. Patient capital. Patient capital. Right. And then we're looking at critical minerals like midstream processing. For example, we have such an abundance of lithium in Nigeria. But even locally, we are not even using it enough. And we have enough to even export. But we even have enough to even process into batteries, into solar, into all these things, into solar batteries. Yes, it's cost intensive, but the question now is, we want to build a lithium processing plant. Probably cost about maybe some hundreds of billions of naira, right? But we might not break even in the next 5 years. We might not. But so do we have the patience to really say? But also, we are not just going to say we are going to make money. Before we even venture, have we checked it? Right? Does it have the potential to later actually make this money with this profit that we're actually envisaging or hoping to make? Is the figure aligning? Is the fact right? But like I said, if someone hears that you're in critical minerals in Nigeria now, they are thinking, are you selling gold? What's that thing that is popularly mined in Nigeria? But when you say lithium, the average person might not really understand. So one of the things I would like to say is that the real opportunities might be the ones that may be hard to explain to the average person. And maybe the ones that is not interested to talk about. It might not be. It might not be. Right. So, but then these are where the real opportunities actually might be hiding that we might need to uncover. And like I said, they need patient capital. They need patient capital. So let's look at where opportunities come from, right? Even though I think I've already explained this. First thing first, guaranteed demand. I explained that when I was talking about cash flow. That you've seen that this thing make real money, not hopes to make money. Like I said, there are angel investors that don't mind to hope to make money. Right. But is there guaranteed demand? How many of us are on band A and are paying for the band A without having band A standard lights? Right? Even the Aso Rock, the president has not on the grid. So even our president has a plan B. I mean, food. Then we have payment systems and things like that. And by the way, I say often that nothing in itself really guarantees that you're going to make money. So apart from even investing in the infrastructure or the system that make money, who are the people at the end of affairs? So one of the things you also have to now pay attention to are the people. You know, one of the worst people you can invest in, or one of the worst entrepreneurs you can invest in, are entrepreneurs that don't want much. That once he makes his first 1 billion like this, he opens a business school. And you know, that he has arrived, really. You know, there was I was saying that how old is Elon Musk? I think that's, is he in his 40s? Oh, can anybody Google? Is he in his 40s or 50s? You know, I'm not sure he's up to 50 though. Right. The same with Mark Zuckerberg. And then check their net worth compared to the net worth of the richest black man on earth. Yeah, he's in his 50s, yeah. Yeah, 54. Now, Dangote is in his 60s. He's worth about, I think, $32 billion, if I'm not mistaken. Now, if it has not dropped, right? Elon is worth how much? About $400 billion. When he sold PayPal, that was already a lot of money. Why didn't he start living on the Bahamas and, you know, he would be a very good TEDx speaker. I mean, he has results. But he said, no, started SpaceX, bought X, even has something called the Boring Company. They build underground highways for Tesla cars. Now there's Tesla again. So we need entrepreneurs with crazy appetite. Crazy appetite. If a man in his 60s, that's Dangote, he's saying that refinery is just step one. He's still going into steel. He's already in his 60s. Some people have retired and they are waiting for death at that age. How much more? Someone in entrepreneurs in 20s, we established that the median African age is 19. Is 19. But the biggest dream of the average Nigerian or African, let me say Nigerian, is to buy Benz. So it's not even, I'm not just saying it as a joke, because this appetite is what investors look out for before they commit serious capital into your hand. If you just want to show that you have money, you are not the right person to invest with. They need people that they find satisfaction in the work, in the building process. That when business is not going bad, it touches you, not just because you have investors' funds. I was watching, there's this documentary. There was this phone that was built. Is it General Magic? I'm not sure General Magic. There was this phone that was built before. It was a failed project, but on that team was the CEO of LinkedIn, CEO of Zoom. So they actually came together to build something, but it didn't work. I've forgotten the name. I think it's General something or something. One of the things I took out of that documentary is that while they were building that, even though they had investors' money, they were living in bunks. They were so obsessed with what they were building. They didn't care about the aesthetics. They were raw builders. They were raw builders, raw entrepreneurs. And those are the people that serious capital will find. Not TEDx speakers. Right? Serious builders. I know someone that even when his business was still doing billions, right, he's in the food space, he was still in the kitchen. Still turning rice and mixing chicken, even when he was already, in Nigerian language, a big man. But how many builders do we really have? When you have a company less than 1 year old and your title is already group CEO. We are so obsessed with titles and all those things. And that's why it looks as if and I'm saying it because we have such a young population. And pardon me to also say to the maybe older entrepreneurial population also. Whoever started selling entrepreneurship with lifestyle didn't do the next generation a good service. Didn't do us a good service. Didn't do us a good service. There's an industry I will not mention. Once you close a couple of deals, now you have mopo. What are they securing? Who is after your life? And then thank God there's now something called Prado. And if you can't afford it, there's nothing bad in it. And I'm not even saying don't drive good cars. But I'm saying, are you as serious with the work, with the way you are as obsessed with the lifestyle? Or you are even just doing the work because you hope that it's going to be able to afford the lifestyle? We need builders. We need builders. One of the questions I love so much when I watch the likes of Shark Tank is, tell me about yourself and what you've done. Tell me about yourself. They want to say, okay, you built something before. A guy came to Shark Tank and he already sold a company for over, I think, about $500 million. And he was asking for, I think, maybe $50 million. And what's his name? Shark was looking at me like, what do you mean? You have money. And he said, yes, but what I want to build now, I need someone of your experience to join me. So he was not even there for the money. But he knew that, no, I want to do something more serious. So I just need someone on this seat to join me, maybe on the board, just have a skin in the game with me. And so that you can guide me through. Those are builders. Because at the end of the day, when we have all this conversation about where to put money into, what sector to put money into, if builders are scarce, our capital will still be useless. So I'm saying this, that even we as investors, as we have the structured financing, we have to start having, and that's why, and I think that's why the likes of Y Combinator and those in the Western world have gotten it right, that they created something called incubation, whereby they can orient and reorient entrepreneurs. So I believe that even investment houses and investment companies need to start having such things for emerging entrepreneurs to, for lack of a better word, correct their mindset and perspective on one, because these are the people that you still want to commit capital into their hands. Whether you like it or not. Dangote will not be around in the next 30 years. I'm not wishing him death. Okay, maybe he wants to be 100. So in the next 35 years, I think 65, right? Or 67. So if he wants to be 51, 15. Do you know it's already above Nigeria's life expectancy. So so we really need to start reorienting builders, right? I got here from guaranteed demand, where builders can stay to ensure that what they are producing, what they are offering works, is needed. Secondly, opportunities come from broken supply chains. Those of us who do delivery business here might have experience. I've ordered, this was years ago. I ordered food from, I can't remember the platform now, and the food came without chicken. So apparently the delivery guy he's been stuck in traffic, he needed to refresh. And he just had fun with my chicken. So that's just the surface level of how logistics is broken. For example, there's no dedicated bike lane. There's no dedicated bike lane that you can say if a bike takes off here, it would arrive at this. There's none. Even buses that we are saying their times are predictable, there's dedicated bus lanes. That's why it can be automated. For example, the likes of Andrew Carnegie, the men who built America, they built railways to ensure that they could transfer oil. We don't even have that structured, solid rail systems. And that's part of logistics. We're looking at pipelines, interstate pipelines. For example, you deliver something maybe at the new port in Ibejuleki, right? Could there be a rail system that can bring it down to the mainland? So wherever. So these are logistics systems that we need to look into. Most of these things will come as public-private partnerships. Right? But these are the way we need to start thinking. Not just that logistics, what's your name? Victor Express. And then you buy 2 bikes. No, you can't blame because that's all you can really afford to do. But when we have structured, clustered financing, that's when we can think of railways, we can think of pipelines, we can think of dedicated bike lanes. We can think of that. Right? So these are broken supply chains that deserves our attention. But there are some of these conversations that we can't even start conversation about until you know that you've raised a capital of at least $100 billion. You've raised, look at the refinery. $20 billion. $20 billion. So, that's, for example, you can't think of railway at least, not thinking of at least raising $1 billion. Because you are not thinking of just constructing one. Not constructing one. At the end of the day, I strongly believe in privatization of many sectors. I strongly believe in that. But we would be able to lobby for that when there is structured capital on ground. That we can say, for example, I strongly believe Dangote will buy Ajakuta Steel. Maybe this part will not go out though. I strongly believe that. I mean, BUA Cement was formerly, what's it called? It was government owned. I've forgotten the name again. Omojano. Is it? No, that's Dangote. Dangote is Omojano. BUA also was a former government owned. So it will shock you. As he said he's interested in steel, you would realize that they will privatize the Ajakuta Steel. And he will do it better. But guess what? The same way you heard of him raising $20 billion for the refinery, he's perhaps already moved on and is already syndicating financing for the steel company. So when you see me advocating for individuals to build something tangible so that they build capital, because I know that the peanut you are putting on the stock market, you say you are putting 100,000, 1 million, is not going to get you anywhere. You are not going to become a billionaire like that. It cannot happen. It will not. That's why I said if you want to be comfortable, Adesina is really not your go-to part, not your go-to company. The goal is not to be a billionaire. The goal is to own sectors at scale. And you can't do that without being a billionaire. That's the truth. That's the truth. Imagine you, for example, the future, cars will drive themselves. Who is at the end of autonomous driving right now? Although Chinese are now dragging it with him. Really? So imagine, for example, Dangote refinery would probably bring Dangote into net worth of over $100 billion. Probably. But he's going to triple or quadruple his net worth. But that's because he's now in control at the end of affairs of what an entire nation is dependent on. That's how to think. Continent. That's the scale we are discussing here. So it will be futile to have this session as Instagram Live. Because people I'm talking to, they're even hoping I'll do giveaway. No, honestly, no insult intended. But that's the reality of things. It will be futile to have the conversation on Twitter space. Most of these conversations, they are private. Right? And they are even, this one is even still public. There are meetings and there are meetings of meetings. Probably we are going to have maybe even maybe from here, maybe I'm going to meet someone from here, maybe, but in another meeting again. Because of the seriousness of what's at hand. We need to. This is my perspective. There is wealth in Africa. There is waste in Africa by incompetent governance. Now, I'm not pro-Africa, honestly speaking. I'm not trying to build any dream Africa. I'm just seeing opportunities and I want to leverage it. But the good thing about it is that these opportunities will transform Africa. Simple as ABC. If we build a working railway system, it would help logistics, farm to market would work, a lot of things would work. If we build, what is it called? Data centers, we build certain digital infrastructures, many things is going to work. For example, in 2026, why should there still be network problem? Why? And do you know that there's a way that with some sectors are now looking far-fetched? Like you've just said to me that, how many of us have ever thought of starting a telecommunications company? Of having fiber optics run through the sea? It looks like, and that's because, except you are in the space, you won't have that conversation. Or you have someone in the space. And that's why you would never, that's when I hear some investors say that salary is money they pay you to forget your dreams. You will know that that person saying does not really have money. Because the only way you would know the problems to solve in those spaces is because you've been there. And not just been there as a casual staff, you've risen through the ranks to the end of affairs, whereby you can see clearly. Why do you think you can't build a bank? You can't say you want to be a CEO of a bank because you have 10 years experience in another bank. There are some infrastructures you can't jump into. There are some sectors we can't say even with capital. We will find someone there that can share it. That can share it. So these are serious conversations we need to have beyond the money. Right? Now we now look at capital scarcity. There's a lot of mispricing. I mean, if you want to have a good laugh as an investor, just go to Twitter, NGX Twitter. There's just on a lighter note, I was running an MBA program, and there's a guy there that everything we discuss on the group is his tweets on Twitter. And he will say it authoritatively as if they are his opinions. You know, everybody has an opinion. There was I was saying that all these people that are even giving stock recommendations and advice, show us your portfolio. Let's even see how much is there. Let's even see. And I have the opinion that if all your investment and holdings on an app, there's nothing much inside. When you truly start doing serious investment, you have your personal stockbroker. You have your person on the NGX floor. You have a custodian bank. But the investment have been communicated in such a way that have you seen something like how to invest with your first 1,000 naira? What are you looking for? What are you looking for? Warren Buffett, that they used to use as reference, that started investments at a young age, said with his own mouth that everything he did from the age of 11 to 30 was wrong. With his own mouth. With his own mouth. And guess what? When he was going to start his first partnership, that was his first proper investment partnership that I was going to do. The capital he raised to start as a 26-year-old to start was $104,100. Convert that to 2026 money. That's $1 million. So it means that he knew that even to just start any tangible investment thing at all, and between 1956 and 1967, 1956 and 1962 rather, he already started about 7 partnerships that were already valued at capital $7.2 million as at 1962. So that's in billions of dollars in 2026. So that means he knew that even as at then, he needed millions of dollars. How do you think within 1956 and 1967 he was able to buy a textile company, Berkshire? And when Berkshire was not going well, 3 years later, he bought GEICO, National Indemnity Company. National Indemnity Company. He bought a national insurance company. He syndicated funds. He syndicated funds. 2 people that dropped $100,000 with him as at 97, without any other investment in any other place, that investment made them billionaires. With no, I mean, forget everything they own anywhere else. Made them billionaires. But let's check the investment strategy that made them billionaires. It was not stock trading. It was owning sectors. Giko. In fact, bulk of their thing is insurance. Then they have the Berkshire real estate, they have, and even when you check their holding, right, they own controlling shares. They are not owning 0.0000%. Right? Graham literally championed what is now called the dollar cost averaging. Championed it, where you can buy a shares at a fixed price over a period of time. Because they were not interested in just buying what they can afford. They build capital to buy what is reasonable. That's contrary to what many people say. Just start with what you can afford. That's a lie. Know what is valuable to be owned, and then syndicate capital to own it. So capital scarcity creates, actually, this mispricing is an opportunity. Like I used to say, the disciplined will always feed on the excited. It's a constant. The disciplined will always feed on the excited. What we are saying here is already too boring for some people. And that's why it's also not public. Right? There's a lot of misprice, there's a lot of emotion, there's a lot of opinions. But when we see this capital scarcity, it's only an avenue to say, if we can syndicate capital for this sector, what are the potentials? What are the opportunities? How big can it grow? How big can it grow? One of the things I used to think about is, at what point did Dangote realize that cement was the main thing? Till now, minus the refinery, Dangote's worth is still tied to about 70% in cement. Do you know the simple story behind that? The construction of Africa is in progress. Do you understand what I just said now? We are still building bridges. We still have scarce bridges. Roads are still not built yet. That's saying that you understand that I don't have to be a construction company, but there's something that is constantly needed if we are going to build Africa. Cement. That's the thinking process. That's the thinking process. That's the thinking process. Now let's look at some regional opportunity map. So across Africa. So in West Africa, we are looking at scale and population. That's more like our strength. Right? We are looking, Nigeria is the highest population basically in Africa. Over 200 million people. So there's fintech, there's energy. One of the things I advocate so much is that if energy problem is solved, so many things will snowball very easily. But if energy also is solved, corruption will be stiff-necked. Actually. If we get energy right, for example, imagine mixed grid or off-grid or embedded grid solution just work at scale in Nigeria. Do you know how many oil billionaires that you are going to put at risk? So why? So these are the issues. But what's the arsenal at play here? It's capital. That's the play. It's capital. Capital is the play. Right? We are looking at East Africa innovation hubs, tech, agriculture. Right? Southern Africa industrial base. We are looking at energy. We are looking at mining. Then North Africa gateway market. We are looking at manufacturing and logistics. But beyond the sectors, don't let us forget what I said, that we are also looking for the entrepreneurs in those sectors. The players. Okay, so let me not use the word entrepreneurs, because to be honest, with the right capital, right, an employee for example, um, what's it called? If you want to build a financial institution now and you want to set up a board, you are looking at the likes of Taiwo or Idele. Is he an entrepreneur? No. But he's a power player. Seasoned one. So maybe this would humble entrepreneurs. That we might actually be overrated. In the presence of capital, employees will get the job done. And we'll put them as CEOs. Maybe this would humble entrepreneurs. We get it that you are the problem solver. We get it that you think you are the one that can have the ideas and all those things. But we might not really be going after ideas. We are looking at what's the problem that needs to be solved. What's the bottlenecks we've seen? And as the player there, you've been in this service sector for 15 years. Oh, we trust your perspective. Okay, we're ready to finance you, but can you lead? If you've even grown to the value, you are CEO, you are whatever it is, you're already an entrepreneur. So who will form a board and cheer you on? So maybe entrepreneurs need to be humbled. And by the way, go and check the successful entrepreneurs. They've been faithful employees. They've been faithful employees. Tosin works with, is it InterSwitch or QuickTeller? No, InterSwitch. Yeah. I can never innovate anything in fintech because I've never been in the sector. I can't think of the solutions Victor would think in a Greek. I've never been in the sector. So it means that at the price of capital, we will find seasoned players who might not be entrepreneurs, but that can get the job done. That's what we need. That's what we need. So if I will be looking at an illustrative allocation, please, at these all sectors, right, you will see that energy has my most votes. Next. Energy has my most votes. And energy might not even be power, like I said. It might be infrastructure that the energy stays on. For example, it might be a boring lithium processing plant in Borno. It doesn't look like an energy company, but it is. I don't have to have a solar company. Right? It might be, now, the problems of, there's a question I have, and I really hope maybe someone here will have an answer to it. What's really the problem of Nigeria's generating energy, power generating ability? Because the reason why our grid fall every time is because it's overwhelmed and is not able to. What's really the problem? Is it capital that is needed? Because I listen to our Minister of Power. I think of all the ministers, I listen to him the most. Because I'm honestly just, maybe because of my interest in energy, I'm honestly just interested in this interview. But the only thing he repeats every single time is that we can't generate this, it falls because of this, it falls because of that. And at the end of the day, we say we need this amount of money to be able to generate this. And I'm like, okay, so all the loans we've been getting, like I said, energy is a strategic corruption abode in this country. See, and let me balance it. That we as investors are trying to play there does not mean we are saints. Oh. But, for example, deep down, I would prefer a communist state. Deep down. With a right leader. I honestly would. Because it would be an even distribution of wealth. All right. But I also know, but when it comes to now having a capitalist or a mixed economy, right, it simply means that we can get the job done and sell at our price. Because, for example, we have refinery in Nigeria. That doesn't mean fuel will be cheap. Because the company is not Dangote Oil Foundation. And scarcity creates demand. And the higher the demand, the higher the price. Simple economics. So one of the things I have concern with is the way they are selling the refinery as a poverty alleviation scheme for Nigeria. Come and own shares. You are trying to make Nigeria own shares of their company. I'm like, this is no. I'm sure this is not the strategy you said in your boardroom. But I mean, there are people that are waiting to exit. I'll leave it at that. So, energy is such a prime sector that I wish that I'm really looking forward to private syndicated capital to really harness. One of the ways that myself and some maybe financial service people would have or are always at loggerhead is because I'm not a fan of dormant capital. And it looks like the concept of asset management is, and don't get me wrong, it's because they are working for the investor. How do I put it now? So if you are managing your money, I want to know what's your appetite. So I want to, okay, let me put this one in a high interest savings account. Let me put this one in treasury bills. Let me put this one in a mutual fund. And then maybe we'll now put this one in maybe some equities. So I can't really maximize the capital or take productive risk with the capital because it's your money. So I have to manage it to fit your appetite. So that's really the bane on it. Because when you check, and I think that's why we need the likes of NDIF, more of that likes. That's National Debt Infrastructure Fund. Because honestly speaking, what most financial services firm can only do is just to, like they say, just to help you manage it. Just don't go broke. You will get returns, but it's not a transformative returns. It's not transformative return. But we need capital that can be put to productive risk. So, for example, is the reason why even at Adesina I said I don't present myself as I'm managing money for. No. I'm not. This is what I'm up to. Do you want to be a party to this? Yes. So you signed your, I don't want this word, death warrant. But I mean, this is the way to get things done. If you are going to invest tangibly and truly make tangible, progress and returns, honestly speaking, we don't need scared capital. To be honest, we don't need scared capital. And I hope there's nobody here with scared capital. I believe everybody here is war. All right. So logistics, you see, I still said it there. Infrastructure backbone, then digital, then agriculture. All right. And then we have special situations, which are the mispricings. All right. Now let's look at some case studies. These are just examples. Basically, we are wrapping up so that we can take questions. All right. Working with time also. So yeah, case studies, digital payments processors, recurring fees. These are the opportunities. These are the cash flows in it. So we are looking at payment processors. We are looking at recurring fees. You are looking at low marginal costs, and you are looking at high retention. Right? How many of us now use money points at our maybe outlets? Right? And before anybody else will come to tell you to change to another one, they would have to bring something else that would really beat what's on ground. So that's high retention, right? And then there's recurring, there's as you make money every day, money point also makes money every day. And then they will now even offer, based on your cash flow, they can offer you some, some credits, right? So payment processors, energy mini grid, right? For example, in fact, this is what I hoped that more real estate developers are going to look into. One of the things I'm really looking forward to in the real estate space is what happened to the banking sectors. There is need for a lot of sifting and consolidation. Anybody can wake up and become a real estate developer. But when there's now licensing for real estate developers, and to get the license, we need to see a minimum capital of 250 billion naira. Let's see how blessing development is going to start. We need that. We need that. I was in a place recently and it was built in less than 2 years and I could not believe my eyes. I'm like, is this a luxury 2-bedroom maisonette with space everywhere? You know, there was a video I was watching and I said, the only reason this person enters this building and said this is a luxury space is because this person is not coming from money. Yeah. So POP is luxury. Because if you bring, for example, if you bring the likes of Okoya's child to say come and sell the property and enters your house, he won't see a regular and say this is a luxury. No, he won't. You know, you've seen his father's house. He won't. You would have to truly be luxury for him to say. In fact, he might be saying it's luxury, but especially he's saying what's this. So I really look forward to a system because something like mini grid for communities, that should be something that should be an initiative from the real estate space. The real estate space. But I mean, the best investment on earth is it. So we are looking at 7 industrial clusters. One of the firms I know does this is, what's their name? They're in Abuja. I once trained them. What's the name of the company? No. I've forgotten their name. They in fact they signed one MOU with the US government about 10 years, $100 billion just for mini grids and for industrial spaces. So they are doing for what's the name? Yeah, Genesis Energy. Yeah, they do something similar to that. But it needs to be done at scale, right? But you can see you see. I put the balance of how they're able to do it. There's a 10 years, $100 billion syndicate fund that's financing it. That's financing that. Then you're looking at long-term contract. And that's why when you're doing industrial, you already know you are doing long-term contract, right? Then agriculture, you're looking at storage and processing to reduce post-harvest losses. If you are planting plantain, you should have a plantain chips brand. Or a plantain chips brand should have a plantain farm. So we need all these things. But because the way these things have been communicated, as just communicated at the surface level. So in agriculture, you just want to go and buy farmland. And then there's a new buzz now in town. Palm tree. Anything goes in this country. My apologies. Maybe there's a agri real estate person on this call. But I've checked it. I've modeled it. This thing is not sustainable. Fractional real estate came. Where is it? Where is it? I know one of the prominent faces now. She's stopping King. Proper one. And come together, 5 people come together and buy land. 5 people come together and buy house. The problem is not the idea. The problem is on what system? Which bank, which financial institution is managing this transaction? Is your in-house accountant? So there's a lot of ill-executed ideas. Right? Then we're looking at logistics, we're looking at warehouse networks. Right? There's a brand in Nigeria that have really mastered this warehouse network. Right? They sell food and then they have a network of kitchens. So they have an outlet. In fact, they're even moving from having just outlets. So we must see them, item 7. You see that they don't have pickup points. So now they don't even have kitchen there. If you go to their airport, Ikeja Airport, there's no kitchen. You just go there, you scan your QR code on the stuff, and then you pick your food. How is the food getting there? That's basically warehouse network. Right? So they probably have a place where they cook in bulk and then it's in clusters. And then they now have the system where they can easily migrate, easily push. And this is, so we have to start thinking in systems. Not just business, but in systems, in scale, because scaling is basically systems. If I'm having a business here and I'm having it in Abuja also, what will keep them synergized is the system. Is the system. And that's why I said before, some of us need proper consultants. It's okay to have made progress based on where you are. But to grow, to scale, it's okay to have a financial consultant. For example, some people would not invest with someone like Adesina without speaking to someone like Faith. Right. But that's just how these things is meant to be. For example, now people want to invest now and they're like, they are going to ChatGPT. Should I buy? My own question is that if you are sick too, will you go to ChatGPT? If your child now is running fever, you say, hold on. My child is running fever on. You find a proper doctor. Also, if I start a YouTube channel now and I start talking about health and all, and you check it and I'm not a medical doctor, would you listen to me? But how come I can just have a flair for financial content creation? I just enjoy talking about money. And the money said, we know it's liable. So really, there's a lot of reorientation that we need. And the more there's some structured financing such as this that goes to the right channel, the more some things that should not be will die in natural death. Like I said about the real estate space, that once there is that consolidation, like the same way some banks died in natural death, some companies just naturally, because they should never have existed in the first place. Right. Then minerals, we are looking at lithium facility, then export premium. The value chain to energy space, especially this grid, this solar battery, is limitless. And how else do we want God to bless us as a nation or as a continent? But we need managerial education, leadership education. Leadership. It was it was Pastor Simon David that said something that if you see a group of thieves and they want to choose a leader, would they choose a police officer? Except it's one of them. That means it's a thief, just wearing police officer's uniform. So he said, so when we look at our leaders, it says a lot about us. All right. So common investors' mistakes. I've already brushed through this though. Chasing growth stories over cash flows. Ignoring currency risks. So that's another thing too. And one of the things I've realized, that if we really address the infrastructure or the systems of these sectors, it will be very rare not to play a dollarized game. You want to get into steel, it's a dollarized game. Oil, it's dollarized. You want to get into what's it called? Even lithium. You want to get into railways, it's not local currency game. It's not. So it means the real what's it called now? Yes, because for example now, if Dangote takes a loan, if it takes it takes forex, or he spends he has his forex now and he makes money in naira. If the naira devaluates, that would be him getting exposed, right? Based on his foreign debt, right? Or foreign, but already there are what's that called now? There are mitigations to that. There are maybe subsequently I would actually bring a banking person so that we have. But I think maybe during question and answers, I would ask some of us here that have experiences in banking on some of these things so that we can have practical terms to them. But I know there are mitigations to all these currency exposures, especially in a country like Nigeria. But also, this is now the balance. We must understand that you are investing in Naira. You are making money in Naira. Should you compare it with, for example, if you check that maybe what you invested in 2016 and then you get your return in 2026 and it grows, by the time you, in Naira term, in nominal term, it might be 500, 600% that it has grown. But by the time you just, you are rich until, if you are rich in Naira and then you convert to dollars and you're still rich, then you are rich. Sometimes, have you been traveling before and then you change money and you are humbled? Like you're just humbled, like, okay. Right. But then, there are just balances to this thing to understand that, okay, I'm investing in Naira. This business is making money in Naira. So even if I'm adjusting for dollars, I should give room for balance, for understanding. Then over diversification. With the old holding company that Dangote has, 70% of the entire group company's worth is still in cement. The one that is coming close to it now is the refinery. What does that mean? There's always the powerhouse that finances the rest. There's always the powerhouse. If you've not been the powerhouse, stop shedding weight too early. Build a powerhouse, right? Then key takeaways. All right, so we're wrapping up already. Now, last slide, please. So we're looking at essential sectors, not obvious. Focus on sectors with guaranteed demand. So this is just like a reminder. We're not just trying to just chase excitement here. Right. One of the sectors that we are currently focused on basically is infrastructure. 100% infrastructure. We are 100% invested in infrastructure. Right. Patience rewarded. Long-term thinking, please. Right. Long-term thinking. If we are going to truly invest for African prosperity, it's not a 1-year journey. It's not a 2-year journey. It is not. It's not. And then cash flow focus. I believe strongly in cash flow. So because that's where compounding really lies. So you can now reinvest the cash flow and then you keep compounding for that's the real power of investment. It's not really in taking out the ROI, but that you can compound it. That's where real power lies. Right. So I hope that this session has hopefully shifted our perspective positively, and I hope that we'll be able to. Before we entered question and answers, right? So I'll just quickly brief us what Adesina does. But I just strongly hope that this session has opened us up to more possibilities than what we think is obtainable on the African continent. I just really hope that I was able to do justice to that, to see that there's more, not primarily to be done for Africa. There's opportunities to be exploited. And in turn, it's a win-win. If we build these sectors, these infrastructures, the face of Africa is going to change. And technically, we are going to be the face. The same way we have the men who built America, we can have the men who built Africa. And I'll be happy to be the forefront of that. In fact, I call myself the father of African prosperity. Right? Because there's just so much to be achieved. Right? My team knows it's not just slogan for me. Right? Since we've been giving business grants, since what year? 2023? 3 years. Every year we give business, we would have a an avenue, and then we'll give business grants. Because we so much believe that these are the people that can build something tangible. These are the people that we can finance in future with this capital. And now I think this morning we've even gotten better understanding that entrepreneurs should be humbled. They are more experienced, seasoned professionals in several offices that you think they work 9 to 5. That when serious capital comes, we will sideline you and take them and put them at the forefront. And we'll leave you with your TEDx engagement. No shame to TEDx, please. Right. So, by means of introduction, for Adesina Assets is a private partnership company. Right. For those of us who might have questioned, what does this guy really do? right? First thing first, I'm not a financial coach. I'm not a wealth coach. I'm not a content creator, please. I'm not. I'm not a social media influencer. So, what you see online, for those of you who have seen the videos, we have a weekly session called Additional Intelligence. It's just like a weekly market intelligence. And then my team just cut out excerpts from it and post. So every Monday, we have we have some question and answers, and I just answer it, or sometimes I just sit and talk, and then they just cut excerpts from there so that I can face my business for the rest of the week. Right. In fact, if you see me do coaching every day, day in, day out, you should run, because that means there's no business I'm running. That's the business. The coaching is the business. Right. So we run a private partnership that I'm the general partner and the investment manager, and then we have limited partners, those are financial partners, right? And then we invest majorly in public equities, right? And then control situations, those are private companies that we can use capital to influence their decision.